the name of the values that keep you alive. Do not let your vision of man be distorted by the ugly, the cowardly, the mindless, and those who have never achieved his title. Do not lose your knowledge that man's proper estate is an upright posture, an intransigent mind, and a step that travels on limited roads. Do not let your fire go out. Spark might replace the spark, and the hopeless swamps of the approximate, the not quite, the not yet, the not at all. The world you desired can be won. It exists. It is real. It is possible. It's yours.
Hey guys, welcome back to the Crypto Economy Podcast. I'm here with John Koval. John's our first guest from the financial services industry, and he's going to be talking to us a little bit about trading, regulation, the settlement of equities. He's got a background in compliance. Thanks for being here, John.
Thanks for having me.
Yeah, so I think to get started, maybe if you could go a little bit into your background and how you've been involved with, the financial sector and, just go from there.
Sure. So I've worked in the asset management industry for over 23 years now. I was at Capital Group for 10 years in operations and accounting. I was the Chief Financial Officer, Chief Operating Officer, and Chief Compliance Officer at an equity long-short hedge fund, and the Chief Operating Officer at a global macro hedge fund. And currently I'm the Chief Compliance Officer of a mutual fund complex.
Awesome. Well, it's great for you to be here. Most of the guests we've had thus far really haven't had much of a background in traditional markets, so it'll be good to get your perspective coming from, someone who's been involved in the industry, someone who's seen it from the inside, so you can, see where it's going to be most affected. And since you have a pretty good understanding of a lot of the technology, it would be great if you could talk to us first about the settlement of equities and, what that is, why it matters, and how you think blockchain can make it better.
Sure. So, like I said, I've been in the industry for over 23 years, and back when I started, the settlement of equity trades basically took 5 business days. It was called T plus 5 back then, trade date plus 5 days. So basically that means you would execute a trade. It would take 5 days for the money to move and for the official ownership to change hands.
And why was it that specific amount of days?
It's just that there's a lot of moving parts, plus the fact that the sheer volume of transactions that are taking place. But when buyers and sellers execute equity transactions, millions of transactions each day, all of the details have to be matched up at the opposing firms. They have the entire operations departments that are looking through all the details of the trades and confirming those details with the counterparties, and making sure that the money moves from the custodians. It's it's a pretty long process, or at least it was. Like I said, when I started, it was 5 days. It got down to 3 days, and just last year down to 2 days. So it's at T plus 2 now, which compared to 23 years ago, it's a lot faster. But compared to what could be done with blockchain, it's a long time. 2 days compared to the possibility of instantaneous trade settlement with blockchain is would really be quite a big difference. There's a lot of firms that are working on developing systems to enable that. There's actually a couple of stock exchanges, major stock exchanges have already announced that they're going to they're planning to use blockchain technology to manage the clearing and settlement of their equity transactions. For example, December of last year, the Australian Securities Exchange announced that it was going to do that, and as of yet they haven't started, but the fact that they are pursuing that is pretty significant. And
so what does that mean for investors, that the settlement period decreases, and what are the ramifications? Why do people care about that?
it eliminates a lot of extra work, like I mentioned, with all of these what they call middle and back office operations at various asset management firms that are matching up details of trades, and working with custodians to make sure the money moves, and then reconciling what actually settled, and the money that did actually move, was that what they were expecting, and that would all be eliminated.
So they're going to save a lot of money.
Yeah, it saves time, it saves money. It'll probably eliminate a lot of middle and back office operations jobs, but there will be new jobs created for people that are experienced in blockchain technology, using that for equity settlement. So it's just it's basically a shift of as we've seen throughout the rest of the economy, as technology improves. There's just a shift.
Yeah.
Some jobs are eliminated in one area, and other jobs are created.
So do you think they're eventually going to get to a point where they might decentralize a lot of these exchanges and make it more P2P and less centralized governance?
That could happen eventually. Way down the line. I think it's definitely in the works, and it will start happening. And we have these two major exchanges. I mentioned the Australian Securities Exchange announced in December last year that they're going to start doing this, and the Hong Kong Stock Exchange just announced last month that they are they're working with the Australian Securities Exchange, and discussing with them how they can also use blockchain for equity settlements. That's the Hong Kong Exchange. So it's starting to happen. It's going to take a while, but I think eventually even exchanges might start consolidating. It'll be interesting to see what happens. I think the one thing that's pretty certain is that blockchain technology will start to be used in settlement of equities trades, throughout the world at different exchanges. It'll be interesting to see if blockchain technology is used for other types of securities settlements. For example, for fixed income securities, for bonds, for derivatives transactions. That still remains to be seen. I think with equities, that'll be first. It's already being done in very limited amounts, but it's very interesting, and I think it's something that will definitely change the industry.
Do you have some thoughts on for example, the CBOE opening up futures for cryptocurrencies, and some of the other impacts that you think cryptos might have had in the financial industry? Do you hear people, within your circles talking about it? Is there, curiosity? Are people really jumping in, you think, like hedge funds, for example? Or do you think they're kind of sitting back and waiting to see what happens?
I think the launching of futures contracts at the CBOE and the CME has increased the amount of investing activity. Although in cryptocurrencies, not by a huge amount, the initial volume in these contracts is not. It's not very high. It's a few thousand contracts a day, whereas in the S&P 500 futures, for example, you have hundreds of thousands of contracts, or millions of contracts traded in a day. So the volume is pretty light so far. I mean, there are many other ways to get cryptocurrency exposure to invest in cryptocurrencies, which a lot of your listeners are probably familiar with. Coinbase being probably one of the major venues.
Do you think some of the volatility and the uncertainty is keeping people away from futures because it's just kind of a gamble at this point?
Well, I think the futures are actually helpful and possibly, I know initially after the futures launched, CBOE I think was in December of last year, and the CME was, I believe, January.
Yeah.
Initially there was quite a drop and quite a bit of volatility that hadn't been seen, immediately prior to the contracts being launched, and part of that might be due to the fact that it's now very easy to short cryptocurrencies with the futures contracts, where I don't believe it was that easy to do before, and so there may have been some
lack
investors.
of downward pressure.
Yeah, I think that a lot of that got unleashed possibly when the futures contracts were launched, but I think going forward, having the ability to take a short position is, in the long run, is good for keeping volatility in check, because I think when you have an asset class that is not easily shorted, you can have a lot of built up pressure that as we saw when the contracts launched, there was a lot of volatility. So
I know. Also, the major some of the major buyers of the futures are actually miners. Somewhat similarly to some of the other futures, a lot of people who are actually in the industry are using it to hedge on their own businesses, which I think is an interesting way that they've sort of gone into line with what everyone else does as far as futures contracts.
I think it's a good thing. It provides liquidity to the market, and in the long run, it should help keep volatility lower.
Yeah. I think it's sort of interesting that we have this dichotomy between all of the exchanges that were built specifically for cryptocurrencies, and now you're seeing more of the classic brokers and exchanges coming in and trying to add functionality. So there's this weird overlap of these two industries right now, where you had the organically grown cryptocurrency products, and now you have the financial services industry adding some of these to their roster. Do you think that's going to become more common, and do you think the other players are still going to have room when the big guys come in?
Yeah, I think there's going to be there's all sorts of ways to invest in cryptocurrencies. I think that's going to only proliferate even more, because right now in the mutual fund and ETF space, as far as retail investors go, there's not a whole lot. I'm looking at just like a handful of ETFs here that were launched really in the last few months, and generally what these ETFs are is that they hold companies that have some sort of exposure to either blockchain technology or cryptocurrencies. They don't actually present a ownership interest in cryptocurrency. So I think the Winklevoss twins are trying to launch an actual cryptocurrency ETF that would represent an ownership interest in cryptocurrencies, and that's, I think, was initially rejected by the SEC, and I think they're still trying to get that approved. But
so a company like Robinhood, where they don't let you deposit or withdraw crypto, I mean, are they essentially just putting it on the books, just saying you have it, and they don't really have it backed by anything? Because it seems kind of suspect. It seems like you can just have it put into your database somewhere, and then everyone at some point has to cash out for cash if that's the way you structured it, and then you never have to even touch it.
Yeah, that's the challenge with getting a cryptocurrency ETF launched and approved by the SEC, is that it would have to have some underlying equity interest in an asset, and because typically how ETFs work is ETFs are usually they own a basket of stocks. There's many different ETFs for all different types of exposures, and they usually, for example, if it's a financial sector ETF like the XLF, it holds a basket of the financial companies that it represents. And so literally there's large market participants that can get shares of the ETF by either turning in shares of the underlying holdings, or they can also receive shares of the underlying securities by turning in their shares of the ETF. And that's, I know, it keeps that arbitrage keeps basically the price of the ETF that trades in the market close to what the actual value of the underlying basket of securities is. And
enough people looking to make a buck to make it all work out.
They usually arbitrage away any difference, and so an ETF that's based on a cryptocurrency would have to have the shares of that ETF would have to represent some sort of ownership interest in a cryptocurrency or a basket of cryptocurrency, in which participants would be able to exchange shares of the ETF for those cryptos, or vice versa. And I think that's kind of where the challenge is right now, is figuring out the mechanism to make that work. But I think eventually it'll happen. If it's not the Winklevoss twins, it'll be somebody else, and it'll eventually get the SEC to approve it, I believe. And once that happens, it will be just another way for retail investors to get exposure to cryptocurrencies.
So you think a lot of retail investors are staying out right now, or staying away? And I know, Goldman Sachs, I think, just bought Poloniex. So it seems like there are some moves being made. But it seems like maybe they're moving more towards just buying the established players instead of investing themselves. I think Jamie Dimon he talked smack about Bitcoin back in the day, and then he had them go and buy up a bunch at the bottom. So do you think there are a lot of hedge funds playing around with cryptos right now, trying to capitalize?
Yeah, I think a lot of hedge funds are through various different venues investing in cryptocurrencies and shorting cryptocurrencies, and they're able to do that because they're private funds that aren't marketed to the general public, so they're not those funds aren't under SEC registration like a mutual fund would be. So they're some of the large institutional players are definitely getting a lot of exposure, doing a lot of trading. Just average retail investor with an E-Trade account, that doesn't have a Coinbase account or doesn't know how to get access to cryptos is probably not investing. But when the ETFs start showing up that they can just click on in their E-Trade account and buy 100 shares of, I think that will only increase the amount of activity, and that'll be good overall. I think for the cryptocurrency markets to have more liquidity and bring more investors into it.
So one thing I think that's sort of interesting is talking about the transparency of blockchain for peer-to-peer trading. It's something you kind of mentioned in your notes. Do you think blockchain could bring increased transparency to financial markets? So if people are able to see with more certainty where the trades are going and who they're going to. I know I remember reading in Flash Boys, they talked about dark pools, for example, where you have a lot of these institutions that are just kind of trading amongst themselves. And do you think transparency is something that needs to be addressed, and that's something that blockchain might offer?
Well, I think what it will do is the large institutions that are trying to move large blocks of shares of equities that are currently doing it in dark pools, and they're the reason why they do that is because they don't want to put their bids out there in the market for large blocks and
Could you explain what a dark pool is, maybe really generally for
yeah, it's so a dark pool is as opposed to like an exchange like the New York Stock Exchange or Nasdaq where anyone like with an E-Trade account that has access to real-time quotes level 1, 2, or 3 or different levels of quotes, they can see all the bids and offers out there on that particular exchange. There's so many shares being offered at this price, and another party wants to buy a certain amount of shares at that price. So a large institution that's trying to move a large block of shares doesn't want to have everyone who's out there watching the market see that they're trying to buy 1 million shares of some stock, because the retail buyers that are savvy can just go out there and buy up a few hundred shares here and there, knowing that the price is going to go up when that large block moves. And so what the institutions do, dark pools are basically venues that allow large traders to exchange large blocks of shares without having their quotes be posted, their bid and offer be quoted on the Nasdaq or the New York Stock Exchange. So it's those transactions are not visible to like the general investing
everyday
public.
Joe.
It's only the large institutions that are members of or have access to these dark pools, and even within the dark pools, they'll break up the trades into smaller blocks. The whole purpose of that is just not to basically to telegraph what your intentions are, trying to move large amounts of shares. And so I think with blockchain that it'll be easier for large institutions to do those types of transactions because they can be done anonymously throughout different identities. All of those transactions will be recorded across all the distributed ledger of blockchain, but they can use a different identity for each transaction, I believe is my understanding of it. They can split up that 1 million shares into a lot of different smaller lots that in each one of those can be they can have a different identifier basically for each one of those trades. So I think, as far as transparency goes, it's the distributed ledger can be seen by all the blockchain participants. They can see all of those trades. They won't know
who's making it.
Whereas now there's only a small number of participants that are members of the dark pool that will see those trades. And even in the dark pool, they don't know who the institutions are. So I think there will be more transparency.
So, you come from a background, I know you do some work with compliance now. So what do you think about the regulatory environment and sentiments as far as the SEC? And, a lot of people have sort of conjecture, but I don't think most of those people have a background in, finance and regulation. Do you think it would be a good thing? And do you see a lot more coming?
Yeah, so right now cryptocurrencies are not regulated by the SEC because.
Hold on. Hey guys, sorry, mic died, so we'll I think we're gonna wrap this up real quick, but so just to keep going on some of the compliance stuff, you're talking a little bit about regulation. So what do you think about regulation in general? Good, bad, coming, necessary?
I think it will come eventually. It's probably impossible to avoid it, and some regulation would probably be good. As long as it's done prudently. So I think the SEC is looking at cryptocurrencies pretty closely. They don't consider cryptocurrencies to be securities yet. However, ETFs that have exposure to cryptocurrencies or blockchain are considered securities because they're sold to retail investors. They're traded on stock exchanges, and they're considered securities, and they're regulated by the SEC. Cryptocurrencies are not yet, so it'll be interesting to see how the SEC, how they decide what to do with cryptocurrencies. It's kind of a conundrum because it's kind of the first currency really that's a major asset class. There's obviously a lot of currency trading going on across the world, and that's not regulated.
Playing by the central bank's rules, essentially.
Yeah, this is a completely different type of asset. So nobody's really sure what's going to happen, but I think it's inevitable that there will be some regulation at some point, and a little bit of regulation is probably a good thing. But
do you have any thoughts on what'll happen internationally? Some of these countries adopting, crypto variations of their own currency, some to get around like sanctions, for example.
Yeah, I really I don't know. I can't even speculate on that. But it's such a worldwide phenomenon that it'll be interesting to see. How many cryptocurrencies survive, and how many different countries step in to regulate them. But
it seems like it could be great for global commerce eventually.
Yeah, it does. Certainly speed up the transaction time and the transparency. One television show I was watching had basically a description of how blockchain was going to be used, I guess IBM is spending a lot of money investing in figuring out how to use blockchain for things like logistics.
They actually beat us out on a contract with a medical marijuana company in Canada. So yeah, they're investing very heavily into the supply chain side of things.
They're talking about how like containers will move through ports a lot faster because instead of both sides having to check the contents of the container, and it's kind of like settling, like I mentioned, settling an equity trade. You have a lot of kind of operations in the middle where they're checking and reconciling and making sure the money moves. With blockchain, it'll also like speed up the logistics of, like, for example, moving goods through a port a lot faster. So I think that's definitely great for the global economy if that's able to happen.
Well, we're hoping so. So anyway, thank you so much for coming on. I know you're busy. Sorry for the technical troubles earlier, guys. But we'll be back on Sunday with another show. Thanks for tuning in, and we'll see you then.